Hello, everyone. We welcome you all for the virtual IPO roadshow of the company Barflex Polyfilms Limited. Uh, we all welcome you to have a discussion on the company with the management. So today we have Mr. Jayant Berry, who's the promoter and managing director of the company Barflex Polyfilms Limited. We have Ms. Sonali Rathi from the merchant banking team, Almonds Financial Services Limited. Let me explain you the flow of the whole meeting. Firstly, we would be giving a small presentation and understanding on the company. Uh, then we will have a Q&A session. Thank you. Now, I would like to give a small brief about the company and the management. So, the company, Barflex Polyfilms Limited, is engaged in the manufacturing of flexible packaging material like barrier coax films, laminates, and PVC labels, which is multifunctional and caters to packaging requirement of various industries like FMCG, processed foods, adhesives, engineering, pharmaceutical, cosmetics, constructions, and others. Their product portfolio largely consists of three-layer polyfilms, five-layer polyfilms, laminates, vacuum pouches, five-layer bulk liner, and PVC shrink labels. We have Mr. Jayant Berry today, who has more than 37 years of experience in this industry. He's the managing director and the promoter of the company. And let me give a small highlight on the IPO details as well. The IPO issue opens on 10th January 2025. It closes on 15th January 2025. The price band which has been set for the IPO is rupees 57 to rupees 60, with a lot size of 2,000 shares. And the issue size is approximately around 39.41 crores, aggregating up to 6568,000 equity shares. Thank you so much. Now, I would like to request Mr. Jayant Berry to please give an opening remark. Thank you so much.
Thank you, Palak. Thanks for the introduction. First of all, I'd like to welcome and thank all of you for joining this presentation, which is our first call with the investors. And we are all excited to have you on board for hopefully a long and profitable journey for all of us together. Thank you for joining this presentation.
Thank you
Over
so
to
much.
you. Yeah.
Now we have prepared a small presentation for you all. Jevanji would be taking you through the whole presentation and understanding about the company. Thank you so much. Just give us a moment to please present the presentation. Thank you.
Thank you, Palak.
Jevanji,
Uh,
yes.
yeah, thanks, Palak. Well, an introduction about our company. The promoters and the senior management team has had 37 years of experience in this industry with some pioneering efforts in 1987. And the core team of the company has been with us. Most of the people in the core team have been with us for over 25 years. So we have a very stable management setup in the company. The main industries we cater to in flexible packaging, I will follow. Basically, flexible packaging has been a very stable industry over the past few years. Even through the COVID pandemic, this is one of the few industries which actually grew during the pandemic, whereas most of the other industries did not do so well. On an average, the growth is of the industry is above 20% per annum. And we foresee that this industry will continue to grow for the simple reason that as our economy, which is a price sensitive economy, moves from an unpackaged mode to a packaged mode, the entry level for packaging is flexible packaging because it is the cheapest packaging option available for almost all products. So, as the economy develops and there is more consumerism in the country and more products get packaged, the growth of flexible packaging will continue to grow. The products currently manufactured by the company are 3 and 5 layer co-extruded barrier films, which find their application mostly in packaging of liquids and vacuum packaging of processed foods. The other, and this, the co-extruded films, the vertical of co-extruded films normally contributes about 30% of the flexible packaging industry size. The main vertical in flexible packaging would be laminates, which is basically for dry products. This product, which is manufactured by us, is basically catering for most FMCG products, detergents, processed foods, automotives, paints, confectionaries, cereals. And the third vertical in which we have a presence is the label business, which in the flexible packaging business would possibly contribute to about 5% of the industry size. And we manufacture PVC shrink labels and BOPP labels, which basically cater to the beverage industry and FMCG sector. Basically, anything that is packaged in a bottle or a jar requires a label. And with the advent of more organized retail, there is a demand for better aesthetics and graphics on the package. And therefore, the demand for such labels, shrinkable labels, is continuing to grow in the country. So, as I mentioned earlier, the company has presence in all the three verticals of flexible packaging, which is possibly one of the few companies in the country which has a presence in all three. And the basic concept which we follow in our company is that we are industry specific packaging suppliers. Just to give you one illustration, for example, in the dairy industry, they would normally require a packaging material for pasteurized milk, which has a limited shelf life of 2 to 3 days. So here we supply the three-layer film, coax film, and for the dairy fats, for the long shelf life milk, which is UHT milk, they require a 7-layer film, which we will start manufacturing post our IPO and expansion. For the dairy fats, which is ghee, they use a 5-layer film, which is manufactured by us. For their products like paneer and cheese, they use vacuum pouches, which are manufactured by us. For their flavored beverages, milkshakes, for the bottles, they use labels, which are manufactured by us, shrink labels. And for their milk powder and dairy whiteners, they need laminates, which are also manufactured by us. So, as I mentioned, we are industry specific packaging suppliers. So when we approach a client in the dairy industry, we believe we bring to them a complete portfolio which they may require. And that gives us a competitive edge when we are targeting customers from such industries. So like this, we have other industries like edible oil and processed foods, where we attempt to give a complete package to them of all possible requirements they may have. The main industries which are serviced by us are edible oil, dairy, cereals, that is commodities, and paint adhesives, processed foods, vacuum packaging, both for the domestic and export markets, for products like dry fruits and processed foods. The company, post the IPO, is going in for considerable expansion of capacity. Most of the machine orders have already been placed and would be commissioned by March 2025. And we will commence commercial production in April 2025. We're looking for a capacity expansion from 500 tons per month to 1800 tons per month. The main main product lines which will be added on in the company now would be WPP, bags, laminated bags, which are basically catering to bulk packaging of cereals, cements, agri-chemicals, pesticides, pulses, in which some of these industries we already have a presence. And the other line which we are adding are extrusion laminates, targeted at the snack food and confectionery industry, which is a fast-growing sector in India. And another line we are adding is the 7-layer co-extruded films, which are the high barrier films required for packaging of edible oils and UHT milk and vacuum packaging of processed foods. And lastly, we will be having a line making bags for the e-commerce industry, initially in plastic and then adding on subsequently in paper also. So basically, and in addition to this, what we have already recently started are recyclable films, because there is a more emphasis generally in the industry to come up with fully recyclable options. So we have over the recent past developed fully recyclable poly laminates, which we currently supply to some major FMCG clients. And as our capacity expands post IPO, we plan to make more progress in such products. As mentioned, our main clients are sectors are dairy, cereals, edible oil, paints, organized retail, processed foods. So that is a brief about our existing business and our future expansion plans. And I would welcome anybody else to ask us any questions. You're most welcome.
Thank you so much, Jevanji. Now, I would like to request all the participants of this meeting to post their questions in the comment section if you may have any. We can call out the questions and then Jevanji can answer the same. Thank you. We will wait for a moment. So the first question is, why are we doing OFS and not primary?
Yeah. The reason we have to do OFS is that for the SME companies, there is the limit of 25 crores of the authorized and paid up share capital. Pre-IPO, the promoters were already having a subscribed share capital of 23 CR plus. And since we have to offer a minimum of 25% to the public, that forced us to offer some part of our equity under the OFS option. As such, there was no requirement for the promoters to liquidate their stake, but it was a minimum requirement of the stock exchange that we have to offer at least 25% of the authorized capital of 25 crores, hence the need for an OFS.
Thank you. Next is, do we have long-term contracts with clients or do we renew them every year?
Well, in our industry, from the private sector clients, there are no long-term contracts. What basically happens is that customers generally, after doing their due diligence and validation of the factories, they select their vendors and then they invest in printing cylinders for their brand. For example, if there is a brand like Cremica, then for Cremica, for all their products, they develop the printing cylinders like dies with converters like us. So they make an investment in that. And then they continue to buy from us every month, subject to the quality and service being good. Basically, in our industry, the two most important things is consistent quality and on-time delivery. Now, basically, our products generally constitute 1 to 2% of the cost of most of our customers' end cost. So, for them, it is more important to have consistency of quality and supply. And once you start supplying them and you are maintaining the quality and consistency in supply, the business continues for a long term, as can be validated from our annual sales. So basically, the orders come in on a month-to-month basis. There is no long-term contract.
Thank you. Next is, do we have end-to-end production capacities or we source from vendors majorly?
No, so we manufacture. There are basically three elements in our manufacturing process. First is the film making, for which we buy plastic granules. Most of them are domestically sourced. Some specialized plastics will be imported. So we make the films in house, and then we will either print and supply them to our customers, or we will print and laminate them and supply them to our customers. So when we do the lamination process, we have to buy polyester or BOPP films, which is a bought out component. So I would say in our total raw material input in our manufacturing process, about 10% of the raw materials of the films we use are bought out components. The rest are all manufactured in-house.
Thank
And
you.
all, sorry to
Yeah.
continue. And all the manufacturing process are undertaken in-house. We don't get any product or any activity done on job work from any external vendor.
Thank you. Next is, could you please throw some lights on the industry? Like we saw, plastic prices were at bottom, and if we got any benefit, and what are the sustainable margins we foresee?
Yeah, so plastic granules were at their historic low in the year 23-24. There has been a slight correction. Now, generally, what happens is when you are doing business with the more organized companies, we enter into a system of freezing a cost sheet with them. And they agree with us a realistic conversion or let's say a profit margin, which we as suppliers should earn. And then on a month to month basis, on the first of the month, second of the month, we have to give them raw material prices of the preceding month, average raw material prices of the preceding month. So if they go up or they go down, generally all of them, I mean, with the organized clients, all these are, if the raw material prices have gone up, the selling price is corrected. If it has gone down, again, the selling price is corrected. So that is the case with the larger corporate clients. With the tier two clients, there is no system of sharing cost sheets, and generally it is on trust. So in when raw material prices go down, uh, there are times when we take the additional benefit, and when the raw material prices go up, we try to get the full increase. It's not always 100% possible, but to a great extent it is possible to get the thing, because end of the day, as I mentioned, for all these customers, the most important thing is to get a quality product and on time every time. And since we only constitute 1 to 2% of their costs, I mean, even if there is a 3 4 5% deviation in the price, it's not going to impact their overall cost structure significantly on a month to month basis. So generally, as the industry has developed now, the price movement of our products are quite linked and stable with the change in raw material prices.
Thank you. Next is, what is the long-term average growth rate we are targeting in, say, next 10 years?
Well, I would, we have very ambitious plans, but it would be minimum 25% CAGR year to year. Yeah.
Thank you. Next is, can you provide peers in each of your segment?
Well, peers in each of our segment in the co-extruded films, there would be significant players would be Vishaka Industries, Supreme Industries, and in the laminates, there are actually different levels of players. The larger players would be Uflex, Huhtamaki, Amcor, Constantia, and the tier two players where we are also positioning ourselves would be GLS, then uh, Jupiter, Canodia. So these would be, and in the label business, the main players would be Taurus Packaging and Chris Flexipack.
Thank you. Next is, in how much time do we see complete utilization of the new capacities?
Well, the new capacities will go on stream in April 2025. It's our objective to run all the expanded capacity at close to 100% capacity utilization. And what happens basically in our industry is we have products which have a good margin and products which have a lesser margin. So we will start with keeping the plants running at full capacity, where there will be a limit, a lesser volume of business at higher margins and more filler capacity, you can say, of lower margins. And then over the months, as we develop the market and get repeat orders, the share of the value added orders will keep increasing, and we will cut back on the lesser value added orders, which are very easy to procure, but yes, they are at lesser margin. The basic idea is that machines must run 24 hours, 365 days, and they must earn some money on a daily basis. And as we keep developing the market, the margin will keep improving on a day to day and a month to month basis. So that is basically the strategy which we follow in our industry.
Thank you. Next is who all are other key persons in the management?
Well, the key persons in our management is head of manufacturing is Mr. K.M. Pandey. He has been with me since 1987, and he has vast experience in this business. He is assisted by his production manager, Mr. Shakya, and Mr. Pathak, who have also been with the company for over 20 years. The CFO is Mr. Anil Gupta, who has been with the company for over 10 years. And the key account management is handled by me personally and with Mr. Pandey. And we are assisted then by a few sales executives who are based at the factory and at our head office and in South India.
Thank you. Next is why are we not considering debt instead of IPO?
Well, there is no specific reason why we are not considering debt at this moment. We are keeping our options open because in this phase we have sizable cash accruals within the company, which are being spent to on buying capex, and working capital will be the balance of the capex, and the working capital will be met by IPO funds. Thereafter, the promoters, what money they get from the OFS, they can also give that to the company as unsecured loans. And we would like to keep our option open for debt at a subsequent time when we want to go into phase two in possibly acquiring. I mean, once we have stabilized our initial expansion program, subsequently, if there are opportunities which come by, acquiring existing units or something which is not part of the IPO as yet, but just a thought is that if something comes up, we can use the debt option at that time. At the moment, we plan to keep it as a debt-free company.
Thank you. Next is in how many days do we get payment from the clients and do we get any advance?
Well, advance is from very few customers, maybe from some export customers. And there are customers, our general credit term would be, let's say, 30 days. Then there are customers who like to pay on delivery and avail a cash discount, a standard cash discount of 2%. Then there are other larger corporate clients who take a credit period of 30 or maybe 45 days, but they have a bill discounting scheme. So you basically, once you supply them, the bills are discounted and you are paid in 7 days. And there are some customers very few customers who will take a credit period of about 60 days. So on an average, we have seen our debtor cycle is about 40 days in the company.
Thank you. Next is since given many other players in the segment, how we will be standing ahead or par with other players?
Yeah. So there are many people in the flexible packaging industry, no doubt. But we believe that we are probably one of the few or only company which has a presence in all three verticals. And our long-term objective, as I mentioned, is that we want to be industry-specific packaging suppliers. So, for example, in the dairy industry, we would project ourselves in such a way that any customer from the dairy industry, when they are looking to buy packaging material, they must give a serious look at us because we provide the complete portfolio which they could possibly require. Point number one is that. So they will get consistency of supply across the SKUs when they buy from us. They will get the expertise from us. And going forward, there will be a stage when we would like to integrate the complete packaging systems, which would involve manufacturing and supply of packaging materials. and supplying support of packaging machines, which will not be manufactured by us, but probably outsourced in association with machinery manufacturers, and providing a systems concept. Basically, the customer wants that when they buy the packaging machine and the packaging material, both must perform on a daily basis without any trouble. So we would like to take that responsibility of providing the complete system. The machine will not be manufactured by us, but will be our responsibility to ensure that the system in totality works for the customers. That would be our long-term objective. And I think once one can achieve that, one's position in the industry is very, very secure.
Thank you. Next is which industries make our major portion of revenue?
Well, the biggest revenues would be coming from the edible oil and the commodities business. When I say commodities, it means like cereals, atta, dal, chini, those kind of industries, which are daily household goods, and their demand is more or less stable throughout the year.
Okay. Uh, Following up on the previous question, do we have any second generation in the business?
Well, at the moment, my elder son is in the UK, and once he's got his UK citizenship this year, he's likely to relocate next year in 2026. So he's done his MBA from INSEAD, and he's been a consultant with Accenture, currently working with British Petroleum and on the renewable energy side. And when he comes back in late 26 or early 27, I mean, sorry, late 25 or early 26, he's likely to join the business. And I have my other son who's basically an environmentalist and a musician. So he will continue to pursue his dreams, which we encourage in any case. Yeah.
Thank you.
And sorry, I would like to add here also, I would like to add here that it is our belief that for the growth and success of a company, it is actually more important to focus on system building. To give a good service to our clients, it's very important that the systems should be in place in the company. Whether I am there or my son is there or any of our professional managers who are running the business are there or not, the company must deliver to customers on a 24-hourly basis a good quality product and on time. And that is possible only with strong systems in place. So the focus in terms of when people ask what is your next generation or succession plan, I think the succession plan should be systems. The systems must be in place, the company will continue to grow. That according to me is more important than who exactly is running the show. It's the systems which must run the show. Yeah.
Thank you. Next is what are the key entry barriers in your business?
Well, the key barrier entries would be, I mean, anybody can spend money and buy machines, but it's the understanding of the product that needs to be packaged. For example, how to explain? It's you need to spend time in trying to understand what exactly the customer needs in terms of what is his packaging requirements, what are their post packaging requirements, their retailing requirements, because it's not just to pack a product, but the product must remain good right up to the customer consumption stage. So anyone who can go deep into that knowledge, science of packaging and of the product that needs to be packaged, that is what is required in the industry right now in India. I think we are all at a very initial stage in that process. Going forward, that is very important to understand the complete people who have mastered this concept is basically Cryovac USA. So we would like to achieve that. In terms of entry barriers at the moment, are basically, you can say, is capex, because the larger corporate clients would like to buy from converters who have invested in technology. So today you can have printing machines which are relatively cheap, and some printing machines which are high end machines, very sophisticated with very good controls, which are very expensive. So at some level, if you are catering to the high end tier one clients, I would say capex is entry barrier at this stage.
Thank you. Next is any payment defaults or client discontinuation in the past?
Well, they have been in the past. They have been in the past, but we now are very careful, and we basically have a due diligence system before we take on a new client. We don't give them any credit, at least for the first 3 4 months. And well, I will not say that there have been no defaults in the past. There have been defaults in the past, but now our doubtful debts are very much under control, much less than previous years. On an average, if I would like to add on this, on an average in our company, I would say the doubtful or the slow debts, doubtful debts or bad debts is under 1% of our consolidated turnover from day one to today. I mean, as a putting a figure to it, it would be less than 1% of the consolidated turnover from the day we started till today.
Okay. Uh, just a second, please. All right. So the next question is, what are the major risks in the business given the commoditized nature?
Well, I don't see any risk in as such because this industry is very big. It's extremely large industry. It continues to grow. It will continue to grow. Especially export market opportunities will come up because India would be the probably the lowest cost processor of flexible packaging in the world. So demand will continue to grow. The and if one focuses on, as I mentioned earlier, one focuses on quality and on service, I don't really foresee any risk factor as such in this industry.
Okay, thank you. We have one last question. So it is, would you be able to answer on where we sit in the cycle of BOPP films?
On the cycle of BOPP films, I'm not
Yes.
very clear what the question is. Basically, BOPP films are not manufactured by companies like us. These are very high capex businesses. I think I'm not sure, but probably investment of over 500 CR to put up a BOPP line. And so BOPP and polyester is basically manufactured by much larger companies. It's BOPP forms as an input for us. It's most commonly used in the confectionery business. So for laminates for confectionery industry, BOPP is an input. But we don't manufacture BOPP, and we would not be in a position to manufacture BOPP going forward because of the capex requirements.
Okay, this was the last question for today's session. Thank you so much, Jevin Ji, for giving us a very detailed understanding about the company. Now, for the closing remarks, I would like to hand over the call to Sonali. Sonali, over to you. Thank you.
Unmute. Sonali has to unmute.
Sonali, please unmute.
Thank you, Mr. Berry and Palak, for all the inputs. So our issue opens on January 10, 2025, and it closes on 15 January 2025. Our price band is rupees 57 to rupees 60. The lot size is in the multiples of 2000 equity shares. And the issue size is rupees 39.41 crores, aggregating up to 65,68,000 equity shares.
Thank you so much, Sonali. Thank you so much, Jevanji. So this was whole about the upcoming IPO of Barflex Polyfilms Limited. So yeah, our issue opens on 10th January. So thank you so much. Here we conclude the meeting. Thank you so much.
Thank you, everybody.
Yeah. Thank you, Sonali. Thank you, Palak, for organizing this.